Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap, and we've got a third straight session in the green for Wall Street, at least for S&P 500, which was up 0.4% to 6,084. The Nasdaq Composite rose 0.5%, but the Dow Jones Industrial Average slightly underwater by 0.3%, losing 126 points, closing at 44,747. And to help us out with more insights, we are joined by Nadine Terman. She is the CEO and CIO at Solstein Capital. Nadine, good morning. Thanks for joining us on the show. How are you doing?
Good, Ryan. Good morning.
Hey, lots to talk about.
How are you?
I'm doing great, Nadine. And we've got a lot to chew on when it comes to earnings. Walk us through what you're taking away from the latest market action.
Sure. So I think during the day, there were some key elements, and we can talk about it. And then afterwards, Amazon reported. So I think that's what you're going to hear about it tomorrow, right? And basically, it's down after hours. It was in the Q&A. And basically, the fourth quarter was slightly ahead. So it was higher on physical stores, lower on third-party services and subscription services, slightly lower on AWS. But the real issue was with the first quarter guidance. And net sales, they're saying, are going to come below estimate. So it was, 151 to 155.5 versus 158.6. Operating income being pressured. And it's really, the headline is it's due to AI spend. So they're spending a lot on AI, and that's getting people a bit disappointed.
Yeah, that seems to be the case for many of these tech companies. You've got to spend money to make money. So something you'll be trying to navigate with the earnings still to come. And looking at what else is also on the table, you have U.S. Treasury Secretary Scott Bessent saying that the administration wants to lower the 10-year yields versus the Fed's short-term interest rate. Could you help us unpack this and what that means for markets?
Sure. So if you remember, we had a couple of years of inverted rates, meaning that short-term rates are higher than long-term rates, and that seemed to have been evening out more recently. But the Fed obviously controls the short end, and there's some, confusion, concern, rather. The current administration is going to be focused on, pressuring the Fed to lower short-term rates. But what you're hearing here is he told Fox Business that they really want to lower that long-term rate. And what does that do? Obviously, it would help raise the price of long-duration assets because it's, the discount rate, what you put in the denominator. When that goes down, the numerator value goes up. But it probably would unleash, more housing sales because long-term mortgages would go down. I don't think that they can do this, but there's a lot, obviously, more that the Fed could do on the short term. But that's something he's saying that they want to do, which I think they're saying would, obviously spur growth in various areas.
Yeah, talking about what else is growing. We've seen Shein and Temu really booming in the U.S. I'm not sure if you're a customer there, but it looks like things might get more expensive because of the action from the USPS recently that they were looking to suspend them, then they reversed it. But it looks like we might see some form of action against them to, I suppose, restrict or apply some form of tariff on Chinese e-commerce companies. What do you expect to see in the coming horizon?
We think that there's a lot of talk, which is more negotiating tactics, but you're right. So logistic agents were saying that Chinese retailers might have to pay a 30% levy after Trump hiked tariffs. And obviously, when there's less expensive products, that could be all of the group's margins. So I think that will be a negotiating tactic. It's also inflationary for consumers here. So if they liked, more reasonably priced things from overseas purveyors, that would obviously hike prices here in the U.S. So we think that it's all a lot of negotiating tactic. You saw Trump not really mention much about China in his inaugural address versus Canada, Mexico, even Europe. Even Mars got mentioned more than China did. So I think that China has a lot of power through materials, technology, other aspects. And so it could be temporary. There could be some hits, but I think that they'll work this out.
All right, talking about China, that was a factor in some of the earnings commentary coming through, especially from Estee Lauder. Sales slow in one of the key markets, of course, China. Do you see that as a problem in this current earnings season where Chinese growth is still, I suppose, uncertain?
Yes, and I think we've seen that for a year, right? So whether it's Starbucks or Apple or Tesla, there's so many companies that seem to continue to miss over because of slower sales in China. And part of that's due to the economy, part of it's due to consumers saving, but then it's also, I think, due to nationalism, which no one can fault them for, is that they might want to buy local, right? That happens in a lot of parts of the world, and people might be more hesitant to purchase international goods versus homegrown goods. And, you know, until there's additional growth avenues globally, I think that you're going to see issues like this, whether it's for L'Oreal or other companies, in addition to the geopolitical or other aspects going on.
Okay, zooming in a bit more into what's happening in the U.S., we have a couple of tax proposals coming through from Donald Trump, and this, of course, to, I suppose, put more cash in the hand of folks who hopefully will spend more. What are some of the highlights here on the tax front?
Right. So there's a variety of them, and that's one of the things that was driving the market today, and they're pretty big deals. So I want to unpack each of them. One would be ending the carried interest tax break. So that obviously benefits private equity folks, venture capitalists. So a lot of those groups would not be able to have the advantageous tax break on the profits that they generate. That's a big deal. So people were able to, I think, fight that off in the last administration under Trump, but it looks like that's back as a proposal. Another one would be expanding the state and local tax deduction. That was a knock on states like California, New York, you know, in the last election a few years ago. And that limited the benefit that people could take from property in very, very high cost places that tended to vote Democrat. So being able to extend that, maybe increase it a little bit, would be a big deal for, I think, some voters. And then ending levies on tips, Social Security payments, overtime, I think that would really benefit lower-end consumers. Those are voters, people who, you know, live sometimes paycheck to paycheck. It would be a huge deal for them. And then cuts made in American products. We talked about that a little bit, that, you know, industrials, maybe some consumer products would benefit. And so these are huge tax proposals. I'm not sure they'll get through, but they are, if any of them do get through, they are a very, very big deal for folks here in the U.S. and probably abroad, too, in terms of trade. Yeah,
a couple of moves to watch out for if they do materialize, and a great overview of some of the top headlines investors should be watching out for. We've been in conversation with Nadine Terman. She is the CEO and CIO at Solstein Capital. Nadine, thanks for the time as always, and thank you so much for insights.
Ryan, have a great day. Thank you.
You too. Catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.